Hey traders, it's John Fortune here of this week's weekly Forex Forecast. I hope you're having a great weekend. What we're going to do in this week's weekly Forex Forecast is we're going to give it a slightly different look. And as you can already see, we have the chart set up slightly differently. There's going to be less editing and there's going to be a more informal way we go through the markets here. And the reason for this is because every single week I go through a process in order to pick the markets for the upcoming week, but it's always done kind of behind the scenes. I don't put it into the video. So what I wanted to do was to start to give a more in-depth analysis of how we get to these currency pairs and show you the entire process in the weekly Forex Forecast. And I think this is going to provide a more in-depth analysis and it's going to be more helpful to you guys. So let me know in the comments if you like the new format, and if you do, I'll continue to do these in future. As I say, it will be slightly longer and slightly more informal, less edited. And so for anybody who wants to jump straight to the charts, I'll index these in the pinned comment below, and you can click and go straight through the charts. But for everybody else who wants to see the process we go through and how we get to those markets, we're going to run through that this morning. So the first thing we're going to do is just have a quick look at the economic calendar. We don't have to look at it for too long, but we just want to see what the key data is coming out next week and how we can navigate that data in the best way to play the markets based around the data coming out next week, and what the week might actually look like based on the events that we have coming up. After that, I'm going to provide you with the relative scores that each of the individual currencies have, and this is an assessment done through spreadsheets. And what I do is I scorecard each of the currencies after doing this relative analysis, and I give them a rating for the week ahead, so we can see which currencies are the best on the long side and we can see which currencies are best on the short side, and we can actually pair those together. Now by doing that, what we're going to do is we're going to isolate the markets which are most likely to trend and provide the most explosive moves in the coming week. And after we've done the relative analysis and we go through the scores for the relative analysis, we're going to look at the individual currencies themselves. We're going to do an individual analysis. And what we're going to want to do when we go through the individual currencies on their own, we'll look at the futures markets. We're going to be matching up the individual analysis with the relative analysis and the scores that we've given the currencies. And really we want both of those to match in order to have the strongest bias on those currencies, either to the long side or to the short side. And finally, once we've got those, we're going to go and look at the markets which that process points us towards, because those are the Forex markets we're going to be most likely to get explosive moves in next week, and therefore those are the markets we want to put on our watch list and look for opportunities in those markets next week. So if we start off by looking at the economic calendar for next week very quickly, you can see there's just a couple of things to keep a note of. We do have a US bank holiday on Monday, and when the US has a bank holiday, very often the markets don't move at all. Monday tends to be the day that the market corrects into position for the move for the rest of the week. When you have a US bank holiday on the Monday, it tends to skip a day and that turns into Tuesday. And so I wouldn't be surprised to see nothing happening on Monday. I would expect the markets to start to begin to move on Tuesday. That would be more of a correction day. And coming into Wednesday, we have CPI data out of the US. Now, apart from the employment data out of Australia, that's pretty much all we need to pay attention to in terms of short-term trading next week. And what this suggests to me is that the CPI data on Wednesday could very well be a catalyst that starts to move the markets next week. And because we have the US bank holiday on the Monday, what I think is going to happen is we're not going to have any movement on Monday. We'll start to correct on the Tuesday, and then once we get the CPI data coming out on Wednesday, we're going to see moves coming into the market Wednesday, Thursday, Friday, and that's when the markets will really start to present opportunities and move next week. So not too much data we need to pay attention to in the short term, lots of fundamental data here when you're building out your macro analysis, but in terms of the short term, those are really the only two things to take note of going into next week. If we go back to the dollar index, you can see on the daily chart here, we really didn't do much last week. We had 1, 2, 3, 4, 5 days of just correcting. But what we're forming here is we're forming a bull flag. You can see we broke above the previous high over here in the daily, the 93.53 roughly. And we broke with momentum, and now we're starting to correct. So what we could very well see is going into next week, I wouldn't be surprised to see the market doing nothing on Monday. And then what we start to do is we start to correct down on Tuesday, and then we start to rally to the upside towards the 94.70, and if we break through here, going to be looking up towards the 95.74. So when we run the data, the scores we get for the coming week are the Canadian dollar has a score of 3 out of 4, the DXY has a score of 2 out of 4, the Aussie, Swiss franc and the pound all have scores of 1 out of 4, the New Zealand dollar has a score of 0 out of 4, so I'm neutral on the New Zealand. And the euro and the Japanese yen both have scores of -3 out of -4, showing that these are the weakest currencies going into next week. And these are the markets which I would prefer to focus on to the short side, or the currencies I would prefer to focus on to the short side. So what does this overall score, or this overall analysis, and the relative currency analysis show us? Well, it shows us the currency pairs which are most likely to trend would be EuroCad, CAD yen, Euro dollar to the downside. We could also look at US dollar yen to the upside. We can also look at Euro Aussie to the downside. I'll be interested in next week. I'd also be interested in Aussie yen to the upside, Euro franc to the downside, Euro pound to the downside, as well as Swiss franc, Japanese yen to the upside, and also pound yen to the upside. Now, obviously, based on these scores, the Canadian dollar versus, let's say, the Japanese yen to the upside would be preferable to the pound versus the Japanese yen, since the CAD is actually a strong currency. But the relative score analysis also shows us something else, which is that not just the markets which are the strongest versus the weakest, but it shows us the markets which are most likely to be choppy. So going into next week, I would certainly be looking to avoid Euro Yen. This is a market which is most likely to range. If you like to range trade, then that would be a good market to try and range trade next week. And also, I would not be interested in US dollar CAD going into next week. This is another market which could be choppy and lack any clear direction, since both the dollar and the Canadian dollar are both quite strong going into next week. So the strongest currencies versus the weakest currencies are going to be the Forex pairs we're going to be focused on going into next week in today's video. If we move on to the individual analysis, you can see we've already looked at the dollar index. If we go to the euro, you can see that we do also have momentum to the downside after we broke the low, and this is the euro futures. So we're looking at the euro on its own. We're not looking at the euro vis-a-vis any other currency. This is just the euro currency we're looking at. We are trending to the downside, and we did start to make a low last week. I am looking further declines in the euro. The 1.170, which is this previous momentum low, which was broken over here, this would be an area you could look for a near-term pullback towards this area. Any break higher above this high, because of the relative analysis we looked at, would most likely be a false breakout. And if we start to come up into this area, I would be looking for further declines in the euro down to the 1.15020. If we go and have a look at the pound, and again, this is the pound futures market, so we're looking at the pound on its own. We're not looking at a currency pair, this is just the pound. The pound is also weak. We have broken what looks like actually a major double top here. You can see here's the low, here's the second retest over here, and we confirmed that down below this level here. And you can see this high previously in the pound itself is what is currently holding price over here. Once we broke above, we tried to break above here, we failed, and once we broke above here, we held here, we came down, we tested, and we bounced, we tested, and we bounced, we tested, and we bounced, we failed, and now we've come back to retest this level over here at the 1.3643. So I wouldn't be surprised actually to see the pound start to come straight down at the beginning of next week. First, I'd be looking for this low in the pound, and then down to the 1.3315. What's also interesting in the pound is you can see, if we zoom in a little bit on the daily chart, you can see this is a very bearish close from this key area of resistance, or broken support turning resistance, which was just highlighted. And again, this is actually a reversal candle. I would not be surprised to see this starting to turn from the Monday or the Tuesday and come down, and we have this bear flag pattern here in the pound. Here's the previous high, here's the previous low, here's the break with momentum, here's the pullback, here's the fake breakout because the pound is weak, looking for a decline now down to the 1.3315. So I am bearish on the pound going into next week. The Swiss franc, you can see we don't actually have as much momentum here in the Swiss franc as we do, let's say, in the pound, which we just looked at, and certainly not the euro. And this is one of the reasons the Swiss franc is not ranked as weak as either the euro or the pound. The pound is actually weaker. So when you're looking at, for example, the dollar pairs, I would prefer personally pound dollar to the downside when we look at the markets, then say US dollar franc to the upside, because the franc is slightly stronger. You can see in the Swiss franc, we did break this head and shoulders reversal pattern, and we're currently sitting right at the confirmation level. So again, this is an area we could start to see the Swiss franc turning over to the downside. Now, when you look back and you think of the pound and the Swiss franc on a relative basis, they had a score of 1. So you may be saying to yourself, well, why, if this is bearish, does it have a score of 1? Because this is just the Swiss franc on its own. So on its own, relative to no other currencies, it is weak, trending to the downside. But because it has a score of 1 relatively, it means that there are other weaker currencies out there, namely the euro, namely the yen. So because the Swiss franc is lacking momentum, you can see it really failed to take out the previous low compared to, say, the euro and the pound. I do think we could see euro franc to the downside this week, and we could probably also see pound franc to the downside, as the Swiss franc itself holds up relative to those currencies. If we go and have a look at the Japanese yen, you can see the Japanese yen has previously broken out of this correction, and we have taken out two targets here. This was previously, and we're currently sitting at an area where we're breaking the previous low, but you can see here this market really has momentum to the downside. And again, if you were to compare this, for example, to the Swiss franc, and you see how choppy this market is, then the Japanese yen really does stand out as a very weak currency. And this is, again, not just on an individual basis, but when we look at it on a relative basis and we run the data, it's very weak compared to other currencies as well. So Japanese yen weakness is definitely something I would be focused on this week. In terms of the Canadian dollar, we have started to break to the upside. You can see in the Canadian dollar, we've been very, very choppy. And I noted in last week's video that we have a stagflationary outlook here in the Forex markets because we have a stronger dollar. But also, as crude oil is rising due to inflation, we're seeing some of the commodity currencies holding up. So the Canadian dollar in and of itself is fairly strong going into this week. It's benefiting from that recent rally in crude oil. We broke out of this inverse head and shoulders. If I drop down onto the 4 hours, you can see this a bit cleaner. But you can see there is an inverse head and shoulders breakout here to the upside, and the Canadian dollar is in a near-term trend to the upside. So if you go back to the daily chart, one of the things I will be focused on primarily next week is to see if we can have some continuation to the upside in this market. And CAD strength, as we looked at on a relative basis, is one of the better themes, in my opinion, going into next week. Australian dollar. The Australian dollar in and of itself is quite interesting. We have this inverse head and shoulders breakout on a lower time frame. If we come and drop down to the 4-hour chart here on the Australian dollar futures, we have this inverse head and shoulders breakout here. You can see this. And we have a very weak close up in this area, having broken above the right shoulder, and we're kind of sitting at the previous left shoulder over here. Now, when we look at the Australian dollar on a relative basis, this is where we can get an idea of whether we have false breakouts or real breakouts. We know that the Australian dollar is only, as it currently stands, a rating of +1. So it's not particularly bullish. In fact, it's kind of bullish to neutral. So I would not be surprised to actually see this fail and see the Australian dollar just continue to be a bit choppy going into next week. So overall, I would be looking for further declines to the downside in this market, and therefore I would not favor Australian long positions over, say, dollar long positions or Canadian dollar positions, or Canadian dollar long positions, I should say. And finally, if we have a look at New Zealand, New Zealand is actually, and if we go to the daily chart here, it is structured to the downside, and it does look like we have further declines in New Zealand despite the rate hike we saw last week. We have broken below the previous low here with momentum as well, and we are forming this kind of bear flag setup. And so overall, although I have a neutral outlook, relatively speaking, on the New Zealand, you can see it's structured to the downside, and I would not be surprised to see this come down to the 0.68050. So what we're looking at here is the individual analysis here is really confirmed, or is confirming the relative analysis. We have a number of markets moving to the downside, like New Zealand, like Aussie, like Swiss franc, like the pound. But relatively speaking, these are not as weak as the euro, not as weak as the Japanese yen. And the two individual currencies which are outperforming technically as well as relatively are the Canadian dollar going into next week, and also the US dollar going into next week as well. Okay, so putting those pieces of the puzzle together, let's move on to the currency pairs themselves. We'll start off just quickly by looking at crude oil, and the recent rally in crude oil has been what has supported the Canadian dollar, and it's seen the Canadian dollar outperforming. And in fact, previously, in previous weekly Forex Forecast videos, I put the Canadian dollar pairs in there, said Canadian strength was something we're looking for, and that was based off of similar numbers. We've had the Canadian dollar outperforming relatively for the past couple of weeks, and this is why the Canadian dollar has done so well. So we are still trending to the upside in crude oil. We took out both targets to the upside in crude oil last week, and going into this week, I am still looking for further advances as it currently stands. Any pullback in crude oil is simply viewed as an opportunity to look for further advances up towards the 83.92. So with crude oil still strong, the first pair that we're going to look at, and my favorite currency pair going into next week, is EurCad. This is the weakest currency versus the strongest currency, and look at the sell-off we had in EurCad last week. EurCad was a market that I highlighted in last week's weekly Forex forecast. That was before we had this continued sell-off last week. I highlighted this, we took out both of the targets set in this market. And again, the reason I highlighted this last week was because we had similar numbers when I ran the data in the morning. It showed the euro as the weakest and the CAD as the strongest. That's why I put EurCad into the weekly forecast, and you saw this paying off last week. So very simply put, going into this week, I am once again looking for further declines in this market. We're still in the daily chart here. Any pullback in this market next week will be viewed as an opportunity to look for bearish setups. And what I'd like to see is, because we're coming quite close to the target down here at the 1.4377, what I would like to see is a pullback first, any correction simply viewed as an opportunity to look for bearish reversals, break lower. I'm going to be looking down towards the next key of support to the downside and target set, the 1.4377. So next market I like is CAD yen. This was another market highlighted in last week's weekly Forex forecast. And again, why was this highlighted in last week's weekly Forex forecast? Well, for the same reasons, because the yen was underperforming in last week's relative data, and also the CAD was overperforming. And what did we get last week? We had a rally, took out both the targets in last week's weekly Forex forecast, and we finished up near the 89.93. So you can see this was as a result of the data which was run in last week's weekly Forex forecast, or before last week's weekly Forex forecast, I should say. So very simply put, going into this week, I am looking for further advances to the upside in this market. Look at the previous break we had here as well, and this is what we want to be looking at. We broke above here with momentum. Look at this. This is where we start to get these bull flag setups. We're lacking momentum over here, lacking momentum, and then we break with momentum. This is an indication that there's a very good chance we're going to be coming up for higher highs in this market. So any pullback in CAD yen next week is going to be viewed as an opportunity to look for bullish reversals. And if we start to break higher and we start to get higher highs in this market, I'm going to be looking up towards the next key resistance, the upside and target set, 91.15. The next market I would look at then, based on what we've just discussed in the currency strengths, the individual and relative analysis, would be euro dollar. The euro is very weak, and I highlighted this market last week. We started to pull back, and this was a market that I identified as being good for short opportunities. We did have a pullback and a nice sell-off towards the target. We haven't got there just yet, so for anybody not involved from last week, or for anybody who did not take short positions, any continued pullback in this market is simply viewed as another opportunity to look for bearish reversals down to the next key of support to the downside and the target set at the 1.1496. The next market I like going into next week is US dollar Japanese yen. Now, US dollar Japanese yen is a market that has been performing really well. We had this big rally, and in last week's weekly Forex forecast video, again, because the dollar was outperforming in the data which I ran before the video, and the Japanese yen was underperforming, I highlighted the fact that we wanted to see a pullback in US dollar Japanese yen, and that would be the opportunity to look for long positions into the 112.190, and that's exactly what we got, and we finished the week right at the target last week. So going into this week, now we've accomplished this target, what I'd like to see is any continued pullback in this market, and you can see we're breaking above the previous high here with some momentum now. Any pullback is simply viewed as another opportunity to start to look for bullish reversals in this market, and we're going to be looking up towards the next key of resistance, the upside and the target set at the 112.87. So those are the four currency pairs that I would be primarily interested in keeping an eye on next week, looking for opportunities for setups in those directions. The next market we can look at, let's look at the dollar pairs, is New Zealand dollar. What we have here is we have a neutral New Zealand against a stronger dollar. So this is a market that we can also look at to the downside. We've started to break down in this market already. You can see we're forming this type of bear flag pattern. So any continued pullback in this market would be viewed as an opportunity to look for bearish reversals down towards the next key of support to the downside and the target set at 0.6807. Next is pound dollar. Now pound dollar, as we looked at previously, this is a market, as you can see, we pulled back to the previous key of resistance over here for a start in the 4 hours. And we've retested this previous low, and you can see I've put a Fibonacci on here for you because this is also the 618 Fibonacci. Fibonacci is just a measuring tool. It's nothing special about it. It just helps you measure risk to reward. We have pulled back to the 618 and we're forming what looks like a double top here. So any break lower in pound dollar, you can see here's potential double top forming. is going to be viewed next week as an opportunity to look for bearish reversals, any break lower and a pullback, and we're going to be looking at initiating shorts down towards the next key area support to the downside of the target set at 1.3399. The next dollar pair we're going to look at is US dollar Swiss franc. Now don't forget, after New Zealand dollar, what's happening here is we're moving on to pairs which are actually slightly bullish to neutral, such as the Swiss franc and the pound and the Aussie. So I do not favor these as much as I would favor, for example, euro dollar, US dollar yen, or even New Zealand dollar. But US dollar Swiss franc is still trending to the upside, and what I'd like to see here is any break above the previous high here would be viewed as the opportunity to start to look for bullish setups up towards the next key area resistance, the upside of the target set at the 0.9370. And the final dollar pair is Aussie dollar. Again, keep in mind the fact that pound, US dollar, Swiss franc, and also Aussie dollar are bullish to neutral currencies versus a stronger currency, so they're not as good. However, any continued pullback in this market, you can see we are also sitting at this potential inverse head and shoulders breakout. The confirmation point was actually here, but we're sitting at the left shoulder. Now, because when we looked at the relative analysis, the Australian dollar, relatively speaking, is weaker than the US dollar. US dollar, we had a score of 2, Aussie was a score of 1. This tells me that this breakout to the upside is probably going to fail, most probably. So any breakdown from this area here in Australian dollar will be viewed as an opportunity to look for bearish setups down towards the next key area support to the downside of the target set at the 0.7158. So we've already looked at EuroCad and also CAD yen. Let's have a look at Aussie yen, because Aussie yen, franc yen, and pound yen are bullish to neutral currencies versus a weak currency in the Japanese yen. So Aussie yen is structured to the upside, and in terms of this market, we have almost taken out the previous target at the 82.09. So what I would really like to see here is, let's see this target taken out first. Any pullback in this market, perhaps to the previous highs over here, is going to be viewed as an opportunity to look for potential bullish setups up towards the next key area resistance, the upside of the target set at the 82.80. Franc yen, a bullish to neutral currency versus a weak currency. We started to break out from this corrective pattern, and you can see we really started to break with momentum. In fact, the previous high is over here, and you can see we are breaking with momentum above here. So going into next week, further advances in this market do look probable because we have this momentum, and we also have a bullish to neutral currency versus a weak currency. Any pullback in this market, therefore, would be viewed as an opportunity to look for bullish setups. And if we start to get some decent bullish setups in this market, this is something I'd be prepared to consider for long positions up towards the next key area resistance, the upside and the target set at the 121.45. And finally, with the yen pairs, let's have a look at pound yen. Now, pound yen is in this order because the pound is weaker than the franc and the franc is weaker than the Aussie. So out of those three there, in fact, the 4 with CAD yen, this is my least favorite. However, we are still trending to the upside in this market. So any pullback in pound yen could be considered next week as an opportunity to look for bullish reversals up towards the next key area resistance, the upside of the target set at the 154.130. And the final 3 currency markets I like going into next week are based on a weak euro versus bullish to neutral currencies. So if we look at Euro Aussie, we are trending to the downside. We actually have this big head and shoulders breakout. You can see if I go to the daily chart here, this becomes a lot more clearer. We also have momentum in the daily chart with this break lower, so I would not be surprised to see this coming down lower. So going into next week, any pullback in this market is simply going to be viewed as an opportunity to look for bearish setups, and perhaps we come back and retest the confirmation point of this breakout. And any bearish reversals will be viewed as an opportunity to look for short positions down to the 1.5773, and if we can break through here down to target 2 at the 1.5689. Euro franc is a weak euro versus a bullish to neutral Swiss franc, as we looked at. We have this head and shoulders reversal, and we're trending to the downside. We came very close to the target set, so really would like to see a pullback in this market if there's going to be trading opportunities. Any pullback towards the confirmation point here would be viewed in this market as an opportunity once again to look for bearish reversals down towards the next key of support to the downside of the target set at the 1.0698. And the final currency market, Forex pair we're going to look at here is Euro Pound. Again, I prefer the strongest versus the weakest currencies, but because this is a weak versus a bullish to neutral pound, this is something else I will be keeping an eye on somewhat next week. You can see that we have had a big sell-off, and what we have here in Euro Pound is a developing head and shoulders. If we come out to the daily chart, you can see this more clearly, and we were correcting, making new highs, and then we had this big sell-off and we kind of broke out of this kind of channel to the upside, but we broke this new low, and this is now developing a potential head and shoulders in Euro Pound. So any pullback in this market, if we drop back down to the 4 hours, would be viewed as an opportunity to start to look for bearish reversals. And we're going to be looking down towards the next key area support to the downside and the target set. So we start to correct, and then we start to break new lows in this area. We're going to be looking down towards the next key area support at 0.84160. So moving on to the stock market and stocks. If we start with the SPX and we scroll out to the daily chart here, you can see we did come down and take out the target set last week at the 4287.69, and we started to bounce from here. We have not yet reversed in the stock market. As a result of this, I would still favor short positions in stocks going into next week in the SPX. The next key area of support to the downside is the 4233.13, and if we start to decline further in the SPX down to the 4233.13, again, this is going to provide a bearish bias on stocks within the S&P 500. Next is the Nasdaq. If we go and have a look at the Nasdaq, this was also a market which we came down and took out the target last week, almost to the point here at the 14457.33. Going into this week, the Nasdaq is still bearish, and the reversal would be above the 15342. So going into next week, once again, because the market is structured to the downside, I would favor short setups in stocks within the Nasdaq, and any pullback in this area would be viewed as an opportunity to look for further declines down to the 14205.97. Next is the Dow Jones. Now, the Dow Jones really went nowhere last week. We just started to correct sideways, and we have failed to break the 3504.90, so I'm still currently bearish on the Dow Jones and stocks within this index. Since we pulled back slightly, I would be looking for further declines in this index down to the 33318.14. Just remember, as I always say to you guys, you don't have to short the market or even short stocks within these indices. If you want to be long only, then what this simply means is you just sit out these markets and you just wait. And once the markets break higher, once you start to reverse, you can then look for long positions in stocks within those indices or even in those indices themselves. So if you don't like to short stocks, you don't have to short stocks. This would just be a wait and be patient time. If you do like to short stocks or you want to build into a long short portfolio, I would still favor short positions in these indices. Next is the Russell. Now, the Russell is a little bit of a giveaway because I highlighted previously how the Russell leads other indices, and as the other indices have been selling off, the Russell has been maintaining its bullish structure, and this is just a correction as it currently stands, and it's still bullish. So if you do want to be long stocks, I would be long stocks within the Russell next week. If you think the markets are going to reverse and the sell-offs in SPX, NDX, Dow Jones are all coming to an end, which they could well be because we have about 5% corrections, then instead of trying to pick the bottoms in those indices, I would prefer to actually trade stocks within the Russell, which is already structured to the upside and which already has a long bias. So going into next week, I am looking for further advances in this market up towards the next key resistance, the upside and the target set, and the 232.3.32. And the final stock market we're going to look at is the Nifty. The Nifty has been a fantastic performing market, and if we drop down to the 4 hours here, I said previously that what I wanted to see was any pullback towards the 17,357. This was the opportunity to look for bullish setups into the 18,047. We have come up, so any continued correction once again for anybody not already long is just another opportunity to look for bullish setups into the next key resistance, the upside and the target set at the 18,047.15. And finally, moving on to gold, silver and Bitcoin. If we look at gold, gold was a market last week which I highlighted to the downside. I said I was bearish on gold, and we've seen with the relative currency analysis, the dollar is actually a fairly strong currency, not quite as strong as the CAD, but it's fairly strong, and this is going to weigh to the downside on gold. And when we look at that relative analysis, we can see, just very similar to what we looked at in Aussie dollar, we have this fake breakout to the upside in gold, and that's because the dollar is still quite strong. So we came up, we faked this breakout with this really very bearish pin candle, and in the daily, the reason I'm on the daily is because of this. You can see this is pointing to further declines to the downside. So very simply put, going into next week, because we've already pulled back towards the 178643 and we have this set up here, let me drop down to the 4-hour chart. You can see this is now an area where I am going to start to look for bearish reversals in gold. I'm going to be looking down towards the next key of support to the downside, and the target set from last week at the 1718.21. Now silver is also a market highlighted to the downside, and we started to pull back in this market, but again we've already looked at the fact that the dollar index is strong. So this break to the upside, we kind of have an inverse head and shoulders break here. I would be looking for this to fail based on the strength analysis of the dollar. So going into next week, if we start to break lower, start to break these lows over here, this would be a sign that I am going to start to look for potential bearish setups in silver. I'm going to be looking down towards the next key of support to the downside, and the target highlighted last week at the 21.15. And finally, we have Bitcoin. Now, Bitcoin was a market that performed really well in last week's weekly Forex forecast. I was looking for further advances to the upside in this market, and we took out both targets at the 50, 505 and the 52913 as well. And what's interesting is Bitcoin is starting to outperform despite the fact we have a stronger dollar. We are still seeing Bitcoin rise to the upside. So if we reset the chart here and zoom out to the daily, you can see we are coming up to potentially retest the right shoulder of the head and shoulders, which started this big sell-off in Bitcoin. So I am bullish despite the fact we have a stronger dollar going into next week. I am actually bullish on Bitcoin still. If we drop down to the 4-hour chart, you can see we're sitting right at the end of this rally. So very simply put, going into next week, again, what I'd like to see as always is any pullback in this market, and you can see we broke above this high here with momentum. So any pullback potentially to the 51.931 would be viewed as an opportunity to start to look for bullish setups once again in Bitcoin. And I'm going to be looking up towards the next key of resistance, the upside, and the target set at the 58.622. So that is it for me for this week, guys. We went through the full process today, so you can really get an understanding of why I'm looking at the charts that I'm looking at going into next week. Once again, please let me know in the comments what you thought of this week's video, and if you like this longer style format. For those of you who like to jump straight to the charts, I have indexed that in the pinned comments, so you can just go straight to the charts in future if you wish to. Although personally I think it's a good thing to have an understanding of why we're looking at the charts we're looking at. And I think if you go straight to the charts without understanding why we're looking at those markets, it can lose a lot of the context. So as always, I hope you guys enjoyed this video, and if you did, please let me know by liking, sharing and subscribing. A big thank you to everybody who does that on a regular basis and everybody who has subscribed to the channel so far. I want to wish every single one of you a fantastic weekend, and I want to wish you all the best in your trading next week. The only thing left to say is take care and don't forget to trade safely.